What's going on, guys? Philip at Trade Genius. All right, we're going to take a look at the Bitcoin chart. We're going to do a deep dive on Bitcoin price action, look at some important levels. We'll take a look at the crypto fear and greed chart. I have a few things to say on that. We're going to look at the heat map and the delta. We'll talk about that. Also going to take a look at the GBTC chart and its premium, show you what we're looking at there. I'm going to look at the futures chart and talk about those levels. Some interesting things to note on the internals. You want to stick around for that. Also going to take a look at VWAP levels. I'll explain what that is if you're not familiar with them. That's something new that we'll look at. I'm going to look at the Bitcoin dominance chart. This is going to affect how alts behave. We'll talk about that. Our fractal meme, see how that's lining up. I will take a look at some longer term stuff. This is the regression lines and also the fib multiplier. So take a look at all that. Money makers have been firing on the 4 hour, which is actually where our current entry is. And nice bounce there if you're interested in that. Head over to tradelikeagenius.com. We've got specials running. You can get this indicator. Pretty powerful stuff. All right, guys, let's dive into this video.
Trade Genius.
Okay, guys, so weekly chart here on Bitcoin. One thing to note, we've had this weekly block. Okay, that's this rectangular shaded area, and it's pretty much buoyed price every time we have a drop down to it. And what's important to note is we don't have any closes below that level, right? So price will test it and then reject. And currently that's what we're working on here, and that's that current long that we're in. A lot of times what we'll see on the weekly chart when we get into this point of the cycle is we will hug this faster moving average. Currently I use a weighted moving average of 20, but generally price will hug that for this part of the cycle. And we're getting into that consolidation phase where we pick gains up out of the bottom, consolidate, and then we start moving toward Q4. All right, this is a daily chart. Now, as you can see, you know, this formation here, we're testing the bottom of this. Actually, that right there is better representation of that lower section. Okay, so we're testing the bottom of this basically consolidation pattern that we have here. I do expect the moves to continue to do something to this effect. A lot of people will then say, well, that's going to look a lot like this whole thing here is going to look a lot like what we saw back here, right? This formation. I'm going to say that, yes, most people are going to be getting bearish at this point and then expecting to see another one of these, kind of like, you know, same fractal setup. But the problem is this part of the cycle is a lot different than this part of the cycle, okay? This is a halving bottom that we just saw here. And now we're approaching the post-halving bottom consolidation to pre-halving move up, okay? So it's two different parts of the cycle, and that's why I'm not so sold on the fact that this would break down exactly like what we saw at the 6K level. So odds are we continue to see more consolidation, more gyrations in the consolidation phase, and then don't be surprised if it gets pretty boring here as we head toward the latter half of September, and then, you know, we can start to expect to see some volatility pick up at that point. All right, let's look at the crypto fear and greed. I'm actually thinking that the crypto fear and greed is like way off. And I don't know if they've changed the algorithm or not, but we had a crypto fear and greed reading of 5, and that was at Bitcoin hitting 10K. So I just don't think that that's very indicative of the true amount of fear in the market. Or if it is, people are just extremely over bearish. I know this takes social media metrics into account, but it just seems like this was doing a pretty accurate job of picking bottoms and, you know, local tops, and I just don't understand this reading of 5 at 10K. In fact, we dropped lower and we have a fear reading of 20. So I don't know, something's wrong here. We'll continue to monitor this. Maybe that was just a one-off weird reading that printed that 5, but I would not be judging trades off of this unless I see kind of a return to more normal readings and bounces related to those readings, or tops related to those readings. All right, so here's the heat map. This is based on looking at the front-running futures contracts in relation to current price. Obviously, we are in the red zone on the heat map, meaning that you want to basically be looking at bounces being somewhat limited. Usually what happens is when you're in the red zone, any move to a moving average is okay to short. So like back here came up to the quicker moving average, stalled out, and rolled over. And that's what the risk is at the moment here. Although I think because of where we are and as far as the levels and the weekly levels, I think we can actually have a chance to actually tag this upper moving average. If the faster moving average gets overcome, what'll happen is it'll seek out the next moving average. Back here it was a 200 period moving average, which is a big one, and then finally it caught up to the slower moving average, which currently up here is at 99.86. The other thing I like to look at down here is the delta. There's support and resistance levels on the delta, just like price. We bounced off of this delta 30 area, which was a previous support and resistance area. And currently, if we get a move back to the delta 60, I'm going to say that that's probably going to be the top of this current bounce. Okay, so that's something to keep an eye on. All right, moving to GBTC. Now, we've talked about this in the past. If you're not familiar with it, GBTC is a fund, one share of it. Now, this trades on regular stock exchanges, right? So if you have an Ameritrade account or E-Trade account or Schwab, any of those online stock brokerage accounts, you can buy GBTC and you can expose your traditional portfolios to Bitcoin without having to get into Bitcoin futures and things like that. One share represents 0.00097 of BTC. So as such, the actual price of $11.82 is actually a bit more. It's 27% or so at the current moment in time, more than the actual spot price. So it's normal for this fund to trade at a premium like that. But what's interesting to note is where premium bounces. And if you can play the premium game on this, and not only does it usually do a good job of actually putting in Bitcoin local bottoms, especially since we've come out of the bear market, but it also gives you opportunities to play those bounces with premium as well. So if you get a move, sometimes what will happen is you won't even get a move on Bitcoin, you'll get a move on the GBTC premium, and you can actually make a swing trade and price doesn't even have to go anywhere. But typically in this bull run, this has been money, getting down at these levels of 25% premium, and then you get a bounce. So currently we're long on that from these levels, and we'll be looking to see if we can get a premium bounce, back to these levels here. 36% would be a nice spot. 30 also would be another spot, you could take profit. Generally speaking, if you get into the 40s with the GBTC premium, like we got here and here, you'll notice that those are pretty good indications of tops. So always be aware that if you see the premiums jump on that, that's going to be an issue for making higher highs at that point. Probably a pullback's in order on, like, say, a daily time frame. So we'll monitor this as we do our recaps, so you guys can keep tabs on that as well. All right, on the gap chart, don't really have any significant gaps to speak of except for where our red lines are, and that is where our major gaps are. So of course, everyone is clamoring for this 85.15 chart or gap to close. I don't see that happening at the moment. So what we're going to basically be looking at, and we're going to talk about this level here, this 9,000 level, a little bit more in the subsequent VWAP chart, but that's the level I'm looking at. If that level breaks, not only will we probably fill this 85.15 gap, we could probably actually test low 8s or high 7s. So that's something to think about. If that gap does close, odds are it's not just going to be a nice well-behaved touch of the gap and then bounce. The other thing too, guys, you want to keep in mind is the 50% mark of the gaps, so half gaps. So wherever we had a gap, if you go look at the 50% level, a lot of times if you extend that line out, which is like what I've done here, you'll see price react to those lines. We don't have anything in the vicinity here currently, but those are areas you want to keep an eye on that price reacts to. So interesting stuff there, but again, nothing in the immediate vicinity to react to. So we'll see how this current bounce up resolves itself, and then we'll talk about this lower level to keep an eye on for possible gap close. In the internals, I wanted to show you guys something that I've noticed, and that is when Bitcoin gets into these areas of these smaller bodied candles. Okay, this is a 30-minute chart, right? Smaller bodied candles, and it's in a range. What I've noticed is that when the funding is, gets into this mode here where it's just consistently to one side, right? And you've got this chopping action where, so this area here, right? And you've got this area here. So funding pointing down means that the traders are positioned short. So they're expecting the market to go down. But notice what happens after you get, you're chopping, and it actually does the opposite of what these guys were positioned to do, and you get a short squeeze, okay? So if you look in this area here, right, this area, okay, so small bars, small bars, small bars, drifting, drifting. The majority of the time, everyone was positioned long, right? And then the final big thrust or BART type move out of that was opposite, and it was down. So these guys were expecting long, and it dropped down, right? So we're getting the opposite reaction. So now if we go to this area here, right, what's everybody doing? They're positioned short again, right? They're expecting this to go down. And we're starting to get that same look, right? And of the small bars, chopping, chopping, drifting, drifting. So I'm leaning toward this move here, a BART move up. Okay, so that's something to keep an eye on with the internals. The other thing with the internals is looking at whether or not we get large drop-offs in short exposure or long exposure, because when that's happened in the past, we see a subsequent move. So we haven't seen any big drop-offs that we can speak of in either the long or the shorter exposure recently, so we don't have to worry about it. But when you do see a sharp drop, like we see here's one and here's one, if you take a line there, right, you'll notice that there was a lot more downside that followed after that drop. Okay, so it's an interesting, I think it has something to do with larger hedges being taken off, but it does seem to predict broader market weakness a few days after that happens. So things that we look at on the market internals. All right, taking a look at the VWAP. Now, if you're not familiar with what VWAP is, that stands for volume weighted average price. So basically what it does is it's taking the ratio of trades and the volume of trades at a particular price and then plotting that average. What I like about that, as opposed to say a regular moving average, is that you're actually taking the underlying like order flow. So it's taking into account how much volume was done at a certain price, and then you're deriving an average from, say, the order flow, which I think is a bit more powerful than, say, just regular price moving average, okay? Because it gives more weight to these levels. So what ends up happening is you have a developing, we're looking at monthly levels here. So when the month closes, price, the moving average or the volume weighted average moves up when price when the month closes, it locks in that level, and so you have a volume weighted price for that month at, for the case of June, was 10,099. Okay, what I like about these levels is that price tends to react off of them. They'll pause at them, they'll bounce off of them. If they go through them, they'll come back and retest them. So you can actually, even on these daily bars, you can see how price stops there, bounce there, breaks through, comes back up, retests it from the underside, then breaks back through, then retests it from the top. So it's just good to see where these levels are. The other thing to note is when the volume weighted moving average, the developing line, crosses over the previous month's line. So these lines represent the close of the previous month, and that's important because, like I said, price reacts off of that. So on this uptrend we had back in May, when we pulled back, we bounced right off of the May VWAP on that June pullback. Okay. Also, too, it's kind of good to see when markets top out, because you'll start to see the developing monthly VWAP move through the prior month's VWAP. Okay, that's pretty bearish. And then when that happens, you'll see price test those levels and then fall back down. So now this becomes a big lid on price, 10,822, as well as the developing monthly VWAP at 10,700 approximately, and that continues to drop. So we'll have August VWAP somewhere in this level of about 10,700. And you're going to see that when things consolidate, much like what we saw back here at the bottom of the market. You get monthly VWAPs that are really in line with each other. But these are powerful levels, guys, that you need to be aware of. For example, if we take a horizontal line, this is the VWAP way back in February of 2018 coming off the top, and you notice that was right around 12,500, and we didn't get but one daily close, just about, I guess you could say two daily closes above that level, right? We had the first overthrow here, close, but then subsequently dropped. And then the second attempt, you had one daily close above that. You had some wicks above it, but that was it. So if you've seen that price action coming up from the bottom into these previous VWAPs that haven't really been tested from the bottom before, and you get these wicks, that's a huge sign that your local top could be in play. All right. So the next one we see will be 15,000. If we see a similar type of volatility, you could even get wicks that are $1,000 higher. For example, the wick here was from 12,924 to 13,800. I mean, that's almost $1,000 wick. So you could see overthrows to 16,000 plus, but ultimately that gives us a local top, and you don't really get any closes above that level. So the key would be seeing daily closes above some of these untested VWAPs from below, and giving us indication if the trend is strong enough to break through them or not. But it's good to see these levels long term. Again, if I put another one on, let's just pick this guy here. You'll see how price came up to that level and was rejected, and then price came down, almost nearly touched it, but acted as an area of support and resistance. So just important to know where these levels are. You can look on TradingView. There are VWAP indicators on there that you can set up like this. So but we'll cover these levels on subsequent videos going forward. All right, on the Bitcoin dominance chart, this basically is kind of like when it's okay to get in the water with alts. If you're swinging and you want to get like a 20% swing on alts, what I look for is the stochastic crosses. Again, this is plotting the dominance chart, which are these candle bars. This orange line is the alt market. So the alt market is dropping, right? And then where it bounces is where we top out on the dominance technicals, right? So dominance, they're going to be basically having an inverted relationship. So if dominance is dropping, alts are popping. Okay, so this is the alt BTC market. So here's another spot where we topped out on the technicals with the stochastics, and dominance tops out and we get a bounce, and then we had one more here. So this isn't a spot where we want to be longing alts. If you're going to be taking the alts as we teach them in the room, you're basically going to be looking for those base hits, and if you're interested in that, head over to Trade Like a Genius and check out what we have. But get into the room and we can talk about when we're currently going up, doing like the daily trades on the 15-minute chart, versus then when we get to these levels, looking at longer term swings. The BTC fractal meme chart. So basically this is a 2-to-1 chart. So in other words, things are happening twice as fast as they were up here, which is back in the 2015, 2016 bottom. As we start, this is the halving bottom. So here's our halving bottom. This is the 2015 into 2016 halving bottom. And so currently we are here, and I've overlaid that price action on here, and we are chopping. And as long as this level holds, I suspect that this is going to continue to chop. And then we're going to look for a little bump toward the second half of September, and then we break out of the consolidation in October if we follow this dynamic. And why fractals work is because it's market psychology all over again. It just so happens that it'll do it on different time scales. So what took place over the course of a 4-day chart might take place over the course of a 2-day chart, simply because things are speeding up. And with Bitcoin, if you are a believer in the overall parabolic, if you're looking at like a very large parabolic view, not the ones that we looked at recently, but like a large parabolic view, then everything should speed up faster. Okay, and we should see larger moves happening faster. So that's how come that lines up with a 2-to-1 ratio. That's the reasoning behind that. So chop and then look for some movement up into the end of September to keep in line with this current fractal. This is some more long-term stuff that we're going to look at just for perspective. Again, this is a regression channel indicator. You can get it on TradingView, essentially just plotting the trajectory, right? So this is trajectory. And, whenever Bitcoin is under blue, I mean, that's going to be your value areas for, especially if you're looking to accumulate. Under blue is great for returns. Above blue is the returns become less. So we're resting right on top of that. If we go to the Fib multiplier, which we've talked about in the past, we are here, guys. As far as in relation to halving cycles, we are here. Okay. we are way ahead of the game because we've popped way above this 50 period weekly moving average. Okay, so we're way ahead of it. We're where this was right before the pre-halving top. So just like how Litecoin saw its recent pre-halving top, this is the same move here we saw in Bitcoin before the last halving cycle. And we're probably going to see something very similar to this halving top. And it might actually be a lot more, as far as price, it might be a lot higher than what people are expecting. We may see a run up to higher than the all-time highs, and then we get a little bit of a relief going through the halving cycle, pull back, and then we kind of resume the overall trend line going higher. So we are way ahead of the game compared to other cycles. Makes sense considering the supply is getting smaller and more participants are getting into the market and larger money is getting into the market. Basically, historically, when we start grinding toward the halving, we're going to settle on a trajectory, and we're gonna grind on that level up and down, but we're going to make a series of higher lows. And so we're kind of at that point where we need to start doing that. This consolidation can continue a little bit more, and then we should start seeing this grind. So the blue level would be the level where price gyrates around if that current behavior is going to take place. Otherwise, if this does break down, this 9,200 level does not hold, then we're going to be looking at a possible drop all the way down to as low as 7,800, I think would then be in the cards. You close that gap and you come down there. Again, that's nothing really bad. I mean, it would be nice to see price hold these levels higher, of course, but I think this is just a brief correction back, and then we're going to reclaim these levels. But the powerful force here is going to be as we approach this halving. Okay, that everything else is going to just follow that momentum. The driver of this is going to be this line right here, May of 2020. Okay, that's going to be dragging price up, and I will not be surprised to see us tag the fib line here. This is going to be fib 3. Okay, so we hit that fib 3 line. I'm actually expecting that to happen prior to halving of May 2020. That line will drift up, so we could again see higher than all-time highs when that happens. All right, guys, well, that's pretty much it for this video. There's your long-term kind of check-in, and also the, going forward here, we're looking at 9,800 to about 9,000 or 10,100, I think would be the top of the move. We're seeing typically what we do see, and that's some moving average resistance here. But I have a hunch that this is going to overtake that and go ahead and attack this prior level up here at around this 9,800 level. As far as our trade, we're risk off now. We've moved stops to our entry, so there's no risk on this trade at this point. We're looking for more upside. All right, guys, that's it for this video. Thanks for watching. Please hit like and subscribe. It helps out our channel so much. We appreciate your views. I'll see you on the next video. Take care.
Trade Genius.